So let me enlighten you on this Sunday's open. There's only 3 ways any open can really play out. Scenario 1. If it gaps, leaves a gap, and prices making it ends on a green candle, and when you're looking at it and it opens green and you're looking at it on 1 minute or a 5 minute or a 15 minute, really I suggest looking from a 5 to 15 minute and watch how the price is pulsing. When you see how price is pulsing and is going green like that, I mean, any open does, but when it goes super high, when it just goes super high, it's important to wait till kind of the end of the candle, because when you're like, if you're especially looking at a 5 or 15 minute, that candle can, because there's so much volatility, it can come down really quickly and just stop you out. So just be careful and be mindful that if you're entering, when you see that, do it on closer to the candle being closed, or close to the 5 minute. You just have to watch how the open acts now. So that's scenario number 1, because I've been in the market where price on a Sunday opened with a huge gap and it's like pulsing, it's green, and at the end of the candle it stopped me on one time, but that means I was just a tiny bit early. So I went back in the trade after it went down a little bit. I just waited a little more and I entered, and that I put my take profit. It didn't stop me out again. Someone stopped me out one time because I was just a little early, and on that same 5 minute candle I entered in the market, and my take profit was at the previous day high, one of my levels that I marked out. Simple. That was 200 points. So that's scenario number 1. Scenario number 2 is if price gaps with a down close, a red candle, and the market has been showing that it's going lower, but we have to read what price is doing now, okay? Unless there's like a super strong trend. If it's a super strong trend, well, you just have to look and see what the market is doing at that time. But when price is, because I'm really talking to myself here, this is what I was talking to myself, to remind myself, to hype myself up and recollect, what a professional trader would do, how she would talk to herself to make sure that we are understanding what needs to happen and not follow any other rules but the rules. These are the rules. This is what I see in the market. Let's not act like, we're going to rush things like we're a retail trader. No, this is how we talk to ourselves before we, are doing our profession. This is our job. Our job is not simply to make money. Our job is simply to read the charts, and you have to play out what could happen and remind yourself your rules and what you're going to wait on. So scenario number 2, the markets, it's gaps open with a red candle. Wait and see how price reacts, at least like 3 to 4 candles in the 15 minute. And if it's continuing to go down, wait for the pullback. Okay, because you have to say to yourself, I have to wait and see what the market is going to create, because the market just opened, so it's starting to create. So mind you, it can create an imbalance. Oh, a fair value gap. That means there are more sellers in the market right now, and price is going to want to come back into that. That is a very good hypothetical guess, which is all it is, because it's all random. So it's just a hypothetical question, and there's not really an answer. The answer is you wait and see. Okay, so do not enter early. So you wait and see what price is going to do. So that's scenario number 2. You wait on the pullback, and you wait and see if it's around your levels. If you just, for me right now, I'm just trading liquidity. I'm not trading fair value gaps, because I am disciplining myself to one setup at a time for a series of 20 attempts. Okay, you've heard people say for a series of 20 trades. In other terms, a series of 20 executions in the market. Every time you see this certain setup, you execute. That's 1. And the next time you see it, that's 2. Now, it doesn't happen every day. We don't need to be trading every day. I have limited myself to only being in the market 3 times a week: Sunday, Tuesday, and Thursday. Why? For me, it correlates with my schedule. Right now I'm getting ready for work, and you know, the nighttime, the 6 o'clock to whenever it's time for me to go to bed, which is sometimes 12, that's when I'm in the markets 3 times a week. But on Tuesdays are my observational days. So I'm just watching the market. I'm building discipline to not put myself in a trade every single day. Small steps, small and steady wins the race. Okay. So scenario number 3. So scenario number 2, on a Sunday, the market opens and it's making a red candle. Just wait for to see how it plays out and what it creates, and then you really start making your assumptions from there. So we don't get in the habit of, oh, it's red candle, it's going down. Do not immediately start making those impulsive decisions. Okay, we're professionals here. Number 3 scenario is that price can continue where it closed. Okay, so price can continue where it closed. So then I mark out I should already have marked my previous day lows, previous day highs, my liquidity, and seeing how price acts when it comes to my level. Now, me trading liquidity and the equal lows, I wait for price to go there. If I see that the market wants to go higher, then my candle would have to go higher than the candle that traded into what I was looking at. You know, previous day low, equal low, intraday low, high, and then my next take profit would be, you know, the next available high, because I should already know this is where I enter, and what is price doing when it reached my level. I have to wait and see it go to my level, go up. You know, I had to see it go to the level and see how it creates. The tap just one time isn't going to matter. We have to wait and see when price bounces at that level, when it is prone to go higher, if it start closing above it. Really, that's an indication right there. So we look for the indications. And or when price makes, you know, these very strong wicks and it's closing above the, you know, the previous day low, equal low, and all of that, that's another indication that price is prone to go higher. You know, all of this is information. You just ask myself, what happened? What is price doing? And what must happen next? You know, you have to make these things simple to you and be able to tell and look at it and see it, you know, without looking at the charts. You have the charts going on in your mind. Okay, you have the charts going on in your mind. You have seen, you're in the markets, you know, you're only seeing what you need to see. So whenever you're not looking at it, you can still see it clearly. Okay, and so you just remind yourself what it is that we're looking for before we start, because anything can be going on in life. Something funny happened, you know, someone distracted you, you know, but you have to bring yourself back to the fact that you know what you're looking for in the markets. You have to bring your attention, you have to bring your focus back to your profession, because you're a professional. So you have to remind yourself, you don't go into the markets blindly. Have you made your markups? You know, what are you looking for? Okay, have you been tracking what's been going on all week? Did you look at the daily? Okay, did you look at the weekly? Have you found any trends? Is there a new trend? Okay, is like a trend forming? Did you make your marks? Did you do your analysis, you know, before the market opened? You have to be doing this at least 3 times a week. At least 3 times a week. You're a professional. You only need, you know, if you have a habit of being very impulsive, being very fearful, hesitating, you have to bring it to small levels, and you make this a discipline, you make this a routine, so it doesn't feel boring, and you are a professional, because professionals don't even trade every single day, because the market is creating every single day, and it has these endless possibilities, but you only need to execute when you see your setups. Otherwise, you're going to think that everything is your setup, and that's not okay, and that's not what professionals do. So you don't even need to trade every day. You just need to trade the ones that you see clearly, that you can see it play out. You've seen it play out in the charts, but you can see it play out in your head. You remind yourself exactly what you need to do before you trade. So you're not going into it blindly every single time, because it happens when you go into the market and you see something, you go in early trying to jump the gun, but you're like, oh, it's the time is now. But you have to train yourself to not rush like that. Okay, you have to. So if you miss out, there is no psychological thoughts that say, oh my gosh, I should have been in that trade, or look what I would have done. If you miss out, you miss out. Okay, stop having this fear of missing out. That does not help us. So we have to limit ourselves to be more disciplined in very small ways. That looks like small things. That look like staying disciplined. And it looks like reminding yourself exactly what it is you need to do before you press any buttons. Just watch it play out. Just wait. And you just have to keep building this habit of talking to yourself like this, because you will mess up. Okay, it just happens. But that's why you have to come back and remind yourself what it is that you need to do, and you need to be able to see it clearly, so that over time it would just become, it's just like that. But you still have to say it to yourself. Okay, this is your way of life. And with that being said, this was a nice Sunday talk. Look to this video every time. You need to remind yourself what it is you need to be thinking of before you place a trade. And make this a habit. Make this a routine, because sometimes we slip, okay? And we have to remind ourselves. What does that look like? Talking to ourselves. Watching this video. Subscribe for more. Stay tuned for more videos. Every week I have something, because every day I'm studying. That's what this is, a profession of constant study, because it will pay you in the long run. So just be patient. Just practice patience. Practice trust. This is CEO Shy of Trading with Trust. Till next Sunday.